Welcome, ladies, to the Real Estate Investor Show, providing inspiration, strategies, and insight to empower women investors to live balanced and financially free lives. Now, here are your co-hosts, Liz and Andressa.
Investors, as we all know, financing deals can be very challenging. If you are looking for funding for your next real estate transaction, we want to introduce you to Fund That Flip.
Fund That Flip is a lender that gets you fast and affordable capital on your 1 to 4 unit projects, including single family rental and new construction.
Ladies, we have known the founder, Matt, and his company for many years, and they are the real deal. So, Andressa, where can they learn more?
Ladies, if you're looking for great terms and reliable service, check out fundthatflip.com/investor.
Shanyn Stewart has a passion for tax strategy. She began her career with General Electric, where she worked directly with GE executives to mitigate taxation. Then in 1996, she founded Advanced Accounting, where she works as a concierge CFO to multiple businesses. Shanyn is a single mom of 2 children, one of which who has autism, so she understands the challenges of balancing home and work. On today's episode, we chat with Shanyn about how to make sure your accountant is working hard for you, deductions that most investors miss, tax-saving tips, and the power of her morning renaissance time. Welcome back, ladies. This is Liz.
And this is Andressa.
Welcome back to the Real Estate Investor Show. We're so excited to have you all back with us on this fantastic journey we're on together.
Woo-hoo!
And Shanyn, thank you so much for being on our show.
Thank you for having me.
We're going to jump into her story in a moment. Before we do that, I thought I'd share a little tip. Not that I have, not that that's little, but, a tip, I should say. So, we've been in the transition of moving, and we moved. So that's exciting. Yay. In the snowstorm, which was very exciting. We had a snowstorm last week here on the East Coast.
It's so funny when you told me about this story about every time that you move, something happened. And the same thing happens with me. No doubt.
Right?
It rains or it snows.
It snows, right? So something big happens.
Yeah.
But, with this move and everything, what's interesting is that we canceled our gym membership, where I work out and take the kids. And I haven't really found, that wasn't like the highest priority, right? On my list. There's a lot of things that you have to do when you're moving. And it's on my list, but it's right there with finding, new doctors and everything. But anyway, I said to myself, okay, I'm not in a position yet to make that top priority. I'm unpacking boxes, trying to keep things going with our business. You got a lot on your plate. So I said, okay, I'm just thinking what can I still do to move my body? So I've been trying to take the long way to do things. I went to a meeting the other day and I could have taken the elevator. I'm like, no, I'm not taking the elevator today. I'm going to take the stairs. So, in the midst of the craziness of our lives, I'm not saying do this instead of going to the gym by any means, but I'm saying, when you can take the long route and you can incorporate some movement of your body, do it, because it didn't cost me anything. I just took the steps, and we have 95 boxes to take to the curb. And I'm like, my husband can help me, but I'm like, let me do it myself. So I did it early this morning and I did it kind of quickly. I'm like, I'll do it quickly. Maybe that'll kind of increase my heart rate, right? It's 15 minutes. I mean, I'm like, oh, that's something I can do in my life. So I guess the tip or just keep, if you want more of something, like I want to keep exercising or I want X, Y, and Z, find how to do it in your life. So rather than, oh, well, I can't do it because I'm not at the gym. Well, that's true in a traditional sense, and it's not long-term, but in the meantime, right? I'm just trying to be mindful of that. So I just thought I'd share that.
Yeah. And I think that you can apply that in everything else in your business, real estate investments. Sometimes we all get overwhelmed with the whole picture.
Right.
And we need to take baby steps. What does that mean? You can determine how small or how big that is, but it's just the feeling of moving forward towards that goal. That's the purpose.
Yeah, no, that's good stuff. And I've heard that said about meditation. People are like, oh, I don't have an hour in the morning. Well, take 5 minutes when you're eating just to say a little intention or being mindful in your life. I mean, you can do that anywhere, anytime, right? You don't have to have an hour in the day to do that. Although that's ideal. We don't all have that luxury sometimes. So, well, without further ado, Shanyn, thanks again so much for being on our show and sharing your story and all the great insight I think we're going to get into here. I'm confident we're going to get into here. As we'd like to do with the ladies that we interview, we'd like to hear your story, obviously, and really, how it all began for you. You're running a very successful business, and you've done investing, you help investors, right? So you have a lot of insight into this topic. Where did it begin for you, and how did it begin for you, and what pulled you into the business that you're in, and just the expertise you have around accounting and all that good stuff that we're going to get into?
Well, definitely. I grew up in an entrepreneurial family, and my grandfather owned real estate. And I remember being a little girl and him kind of saying offhanded that, the markets will come and go, but if you own real estate, you have an appreciable asset. And if you hold it long enough, you're going to be just fine. And during my marriage, we owned rental properties. And unfortunately, through the divorce, those went to the wayside. And now I own properties now for appreciation purposes. And so not a rental type of scenario, but I'm holding raw land for appreciation purposes. And so, I'm a serial entrepreneur, but my passion has always been in tax strategy and helping individuals, helping entrepreneurs, mitigate their taxes in a legal way. There's so many legal caveats in the IRS code that we don't have to walk in the gray. There's no need to do that. And so I love working with people. I love educating people. And my motto for my life is never withhold good when it's in your power. And so when I meet people, I always want to leave them in a place of increase and expansion and leave them in a better place than what they were. And so that by applying tax strategy and business coaching to the entrepreneurs I work with, it just is an ideal fit. And I did corporate America. I worked for GE. I did the corporate America thing. And I had one of my managers tell me, you don't play well with others. I was like, you know what, you're right, because I'm a leader and leaders are always out front and I'm never looking in the rearview mirror.
Yeah.
And what you said today about, just finding time, if you wait in your life for it to be the best time or the appropriate time or the right time, that never happens. Because while we're raising families and building businesses, life happens.
Yep.
Crud that creeps in, and you can't wait for the ideal moment, because if you do that, life will pass you by in a blink of an eye. So
I completely agree.
Yeah.
And one of the most common things that the ladies that are listening to us and the ladies that are part of our Facebook community, and they ask constantly, especially the ones that are starting out, when should I do an LLC? Should I do something else? Or, oh, crap, I own 10, 15 rentals all under my name. What are the tax benefits if I put everything on an LLC? What are the asset protections that I will gain doing that? So from your perspective, since you do have also a business perspective, some of the accountants that we come across is very right, 9 to 5-ish, I'll say. So from those ladies that are listening to us, and they're either starting or are already have their rentals and their investments, is there a strategy that they should go for?
So definitely, I am unique. I tend to be an entrepreneur who happens to be a tax strategist.
There you go.
That's how I make, that's really, I have an entrepreneurial mindset. So here's the thing. You should be planning from the onset. I mean, really, a well-laid plan is going to save you so much headache down the road. One of the things that I work very closely with, I have an attorney that I work with out of Austin, and he does serial LLCs and, for asset protection purposes. And so he and I work very closely with our real estate investors. And we actually, planning is so critical. I mean, not only from an asset protection standpoint, but from a taxation standpoint, to make sure that you've classified yourself. If you really are a real estate investor, are you a real estate investor? Is this a passive activity? Are you a real estate dealer? You really need to have clear guidelines, and your books and records must dictate that. They must actually prove what type of, I mean, am I in the business of being a real estate investor? Am I a real estate dealer? Or is this just a hobby that I'm dabbling in? But anywhere along the line, I mean, I think that making sure that you have a proper formation of an LLC is very important. But so here's the thing to remember about LLCs, and I'm not an attorney.
Sure.
We work with them, but an LLC is on the state level. So that means nothing to the IRS. So that's your state level. You have to choose when you have this LLC. You then make an election. Is it a disregarded entity and I'm going to file it on my personal tax return? Or am I going to be a partnership? Is it going to be a corporation? Does it make sense to be a corporation? So these are different tax strategies that you have to take a look at. And everyone's situation is going to be a little bit different.
Right.
But the LLC is going to give them that protection. And that, that happens on the state level. And then they need to choose on the IRS level how they're going to be taxed.
Shannon, it's so interesting you're saying this. I think when we started, we were looking for an accountant. We knew we needed an accountant, and obviously they needed to have that expertise. We weren't even thinking you needed a tax strategist. I get that now, being in this business for some time, but I wish we knew that at that point. But, then you have a couple accountants and some of them weren't even familiar with real estate. I'm like, that's not a good thing. Yeah. So that wasn't a good thing. We ended up finding a great team member and he's become like a tax strategist with our team. And I can't say how important that is. I mean, at what point does an investor, women listening to this, do they need to hold a certain amount of properties to feel like they need that, quote unquote, they have to go beyond just a normal, you file my tax returns, like somebody who's really looking out for that strategy perspective? Or does everyone need to really have that frame of mind? I'm curious to get your thoughts around that. I mean, I see the value of it, but we have a portfolio we've built and we're growing and we want to shelter and do this in the most legal way, but obviously pay the lowest amount of taxes we legally can, right? Everyone does. But for someone that has, a smaller portfolio or has a large portfolio, it doesn't matter. When do they need a strategist part of their team? And
I think one of the things I want to say is that 97% of accountants and tax professionals are not strategists. And it's not to diss them or to even say that they're not doing an adequate job. Keeping you in compliance is a full-time job. And oftentimes in my industry, they've been taught to be historians. So they're not about creating history, they're about recording it. And so it's a mindset in my occupation that I really see happening. And I catch a lot of flack when I do a lot of podcasts, and I get some really bad comments from other tax professionals because you got to stop recording history and you have to make history with your clients because it's a disservice to them.
I love that.
But it's a mindset. So let me say this. I would ask someone, so when someone comes to me and they may only be thinking about real estate investing, or they may have one property, or I have a gentleman who has 210 pieces in his portfolio, Yeah. I always ask them, when was the last time your accountant saved you money? When was the last time they saved you money? When was the last time they came to you with a tax saving idea? Or are you researching on the internet and trying to figure out if the new Section 199A applies to you as a real estate investor, and you're taking the information to them to see if you implement it?
That's a great point.
It's about finding someone, as you just said, Liz, who's a team player. Like, we have a team player. We have someone who has our best interest in mind, and their whole job is to make sure that we are properly structured and we're paying the least amount of taxes legally underneath the code. So I don't know if that's kind of gives you an answer, but I really think that a tax strategist pays for themselves.
Right. And for the ladies that are listening to this episode, sometimes no, every year when it's tax time is just that stressful moment where we all need to gather and come to Jesus moment and say, can't avoid this, gotta do this. And I love what you're saying, that your tax accountant or your accountant, CPA, ... that person needs to be your team player. If you're coming to them to give them, hey, this is what's going on. I don't even know that some people have meetings with them in a yearly base, because what you're saying is that, okay, here's where I am now and here's what I want to go. What do we need to do in order to be there? And for some people out there, I think that they might be pissed off right now because they're like, I never got that call. So how can they differentiate? It's just the title that is a tax strategist, or how do we know, like, okay, do I need an accountant, a tax strategist, a CPA, certified financial planner? There's so many things out there that is just overwhelmed sometimes. So how do we know which one should we go for?
Well, and so here's the situation. What you're looking for is someone who has proactive services. So we meet with our clients. Some clients who have bigger portfolios I speak to every month, and we do like a concierge CFO, but at least quarterly, or before you sell that property or you buy that property, you need to have a consultation, and it has to be proactive. So if you're working with a tax professional and they are very proactive, or you go to your tax professional and say, I need this. This is what I need. This is what I desire. This is the need I have. Can you fill it? And if they say they can, then definitely enter an engagement with them. But you're going to know right away. I mean, if your experience has been, they don't ever call me, I get their annual letter with my organizer and I take my box of receipts in, right? Usually they're going to talk to you they're going to say they're a tax strategist. They're going to differentiate themselves as a tax strategist. And they're also, it's not going to be, you cannot get this strategy as an H&R Block or, a Jackson Hewitt. I mean, you need to seek somebody who has the reputation and the experience of helping entrepreneurs from a strategy standpoint. And I think that your tax professional may be able to be trained to do what you need them to do as well. I think that there's a lot of tax professionals that are out there who have this wealth of knowledge, but as you said earlier, oftentimes they're not good communicators. I had someone call me the other day, and she was with an accountant, and she said, I've been with this accountant for 32 years.
Wow.
And she said,
lifetime.
Yeah, lifetime, exactly. And she said he doubled his fees.
Wow.
And I said, well, here's the deal. I go, there was a new tax law change, if you're not aware,
Correct.
The biggest in the last 35 years. They totally rewrote the code for businesses. It's a whole new ballgame. It's going to take us 100% more time to do what we did before. And his fees are probably justified. So if you like your accountant and he's been good to you, and here's what happened. He didn't communicate with you. And so you felt like his fees were not warranted. He's an accountant. He's not a communicator. There's a difference.
Yeah.
You pay him to crunch your numbers. You don't pay him necessarily. Now, it's good to have a personality.
Sure.
I can have a very big personality, but if he is doing an adequate job, he's keeping you in compliance, and he can give you all the scope of service that you really want, then that relationship is critical because he knows you. So I think it's really important about being very open with your tax professional of what you desire and seeing if they can actually offer that scope of service.
Yeah. Yeah, no, that's great. I mean, and like you said, on a quarterly basis, you should be meeting with your tax professional, to your point, and really asking them questions. But they need to be knowing where your business is headed. They're not going to wake up every day, calling you like, "Hey, what's your goals?" They may, but really, let's be honest. If you're meeting on a quarterly basis, you're going to have those conversations then. And how do I? Especially when you're buying and selling a lot of properties. I know we had to undo a portfolio of ours, and we were really nervous because that business, we really needed to sell the properties. It was a partnership that was ending and what have you. But we were nervous about what's our tax liabilities because we needed to clean that up in that kind of portfolio business. And our accountant was right there with us. He's like, well, and I'm like, oh, thank God. Like, that's so helpful, right? Versus not knowing, and then we have people to knocking on our door, you owe us taxes. So, no, that's great stuff. So I'm sure you get the question, Shanyn, but as a real estate investor, what would you say are the top, tax saving tips that most investors overlook, and we all want to save taxes. We all love saving taxes. But what would you say are a few tips that you can give the ladies listening about how do they, save on taxes?
Oh, definitely. So here's one thing that I find oftentimes, because oftentimes real estate investors have other entrepreneurial ventures as well.
Yeah.
And one of the things that, and we work with other tax professionals, they'll bring us in just to do the strategy. And I'll say, where's your accountable plan? And the tax professional on the Zoom will kind of look at me and look at the, like, uh-oh.
Let me Google it.
Exactly. Let me Google it. So having an accountable plan. So basically what that is how there are oftentimes expenses that run through your personal life that never make it to your profit and loss. Like your home office deduction. Yeah. He might be taking a safe harbor deduction, but are you getting $700 or could you be getting $4,000 write-off? What about your cell phone, your mileage, there are a lot of things that you may, as a real estate investor, be running through your personal life that are actually business expenses, and having an accountable plan, which is just a fancy way of keeping track of this from an IRS standpoint so that we can legally claim it on the return. The average, when I'm working with individuals, when we're doing that, we are actually finding $5,000 to $9,000 of tax write-off.
Wow.
Another thing, it's hot and heavy right now. Cost segregation studies. Like, why are people not doing cost segregation studies? I have actually 10 individuals in process right now of cost segregation studies. So that's one of the things that I really talk to my clients about, is that a cost segregation is just a common strategy. It's a tax planning tool that allows individuals who've constructed or purchased or expanded, remodeled, any kind of real estate to increase cash flow and accelerate their depreciation while deferring federal and state income taxes. And this is the time of year, if we're going to get that deduction for 2018, it needs to happen, and it needs to happen right now. And it's amazing to me, especially with individuals that are doing a lot of 1031 exchanges. We can just kind of kick that tax man down the road. So I think that's really important too, is just to understand the strategies that are out there and employ them, and having confidence in your tax professional that they know how to implement these strategies for your particular situation. Go ahead.
Shanyn, curious to go back to the personal expenses and the home office. That's it's a good one. We, like you said, there's a percentage, but you said 700 to 4,000. So, that's an interesting perspective. So how would someone be able to max out some of these expenses? I'm curious. There's
something called the safe harbor, a safe harbor deduction, and you can take $5 per square foot, and so if you have a very small space, that your safe harbor. Now the safe harbor, let me say that if you choose the safe harbor method, the IRS can't audit it. Okay?
Right.
I'm on the belief though that first of all, you always are honest, because karma is bad and you should always be honest, never tell a lie. So the thing is, when we're talking about home office deductions, mileage, it's all about record keeping and having the proper documentation to substantiate that deduction. So, you're looking at, and you can substantiate this. You've got your mortgage interest statement, you have your real estate taxes, you have your utility bills, you have your cell phone, you've got the security system, you've got the incidentals, I had someone back into my awning delivering something, I had an expense, you have the housekeeper. All of these things go inside. And actually what we've done is we've actually built a program, and our client just goes in there and fills it all out. And it's shared with us. And so at the end of the year, they just go in there and they just, when they get their documents, or it'll download their utility bills and things. And so when it comes to me, I already know what it all is. And so when we have a conversation, it's just a quick conversation to say, is there anything that we missed? I had one gal who was going to a lot of real estate conferences and real estate investor conferences, and she was running it through her personal bank account. And then as we were doing our planning, I'm like, didn't you say you were going to I remembered, didn't you say you were going to a conference? And she's like, yes. I'm like, I don't see it on your P&L. And she's like, oh, can I deduct that? So there's things that happen that we don't think about, that we need to translate. We need to be able to communicate that to the tax professional so that can actually make it as a deduction onto the return.
Right. I want to circle back on the new tax laws that came, right? There's so many, I mean, I heard so many different things, different perspectives, I will say, about the same subject. And I was like, I'm confused. Like, seriously, like, for the love of God, somebody tell me what are the real impacts? You mentioned that it will take longer for accountants and tax strategists to do the work, but what are the impacts on the real estate investors, and how can we, is that a benefit or we just got worse?
Well,
It really depends.
Yeah, so here's the thing. You're right. There are so many opinions, and we really didn't know because they passed the law, and we're waiting for the IRS to give us regs, right? We're waiting for those regulations, and now we're all speculating. But now the regulations are coming out. So, there's a couple of things. A lot of the code was for really big commercial real estate companies. So let's talk about the impact of just on the average investor. First of all, we've got lower tax rates, which are a good thing. But one of the big things is that we have this new pass-through deduction. The new pass-through deductions, they may hear it as a 199A, is available for nearly all individual taxpayers with business activities, other than C corporations.
Okay.
So if you're a sole proprietor, a partnership, an LLC, an S Corp, it's a deduction up to 20% of your income. And I believe that it appears that for real estate investors with passive rental income, which is reported on your Schedule E, and I'm going to say it appears because that's my interpretation and other, expert interpretation, right, that passive real estate investing would be considered a business activity and would be qualified underneath this 20% pass-through deduction, which happens it's going to be happening on your 1040. So the deduction is up to 20% of your net business income. Now it's limited to certain higher income levels. So that's where some more tax planning actually comes in. And the calculation can actually be a little bit complicated, but from just like a high overview, you qualify for the entire deduction. It represents a 20% cut in taxes related to real estate investment income. If you are single, the cutoff is $157,500. If you're married, filing joint, it's $315,000 of total taxable income in order to get that deduction. But that's huge. Now that's going to take some time for your tax professional to calculate because there's different methods of calculation. Right. Another thing is vehicle. Like I'm amazed when I see investors, small real estate investors come to me and they're not deducting their vehicle. If you have a vehicle that you use to manage properties, it can be claimed as a deduction. You can now have benefit from accelerated depreciation schedules, which means you get to expense it sooner, reduces your taxes sooner. But, there's always a but, right? There's always like, yeah. In order to benefit from the change, you must claim and document actual vehicle expenses rather than just standard mileage.
Got it. Would that be the receipt or... Yes. Would the bank statement or credit card statement will be sufficient?
Right. So here's the thing: you need your gas receipts.
Right.
Okay. I always say save the receipt, have the backup of the credit card, statement, the bank statement. I always, I want a mileage log, even though we usually don't use a mileage log. I want to be able to substantiate where you were going and what you were doing. You can use your calendar to do that.
Sure.
If you ever went into an audit standpoint, you're going to pull out that calendar and say, I was at property A, B, C, D this day. But you have to take the actual expenses. So the cost of the vehicle, the gas, the new tires, the oil changes. So if you're a real estate investor that just claims standard deduction, you're not going to get that added bonus. But you really need to weigh. And here's the thing: your tax professional usually is going to take standard mileage because it's easiest.
Correct. That's what I'm saying.
I think you're raising a great point because it's a really good point. Like, what are they doing from a standard perspective versus actual, like you're saying? And then how do you then prepare for that? Because then if you say, okay, well, I'm going to do like actual, and you're like, oh man, like I got to now think about where the hell I was this last year. I mean, I don't even know where I was yesterday, let alone going back the whole. So you got to be prepared for that. You have to actually really be prepared to take those.
Right. But here's the cool thing about technology today. We've got these little apps on our phone, like Receipt Bank, and we just take a picture. Like I go to Costco, I hold up my receipt for my gas.
What's that called? What, Receipt Bank?
Receipt Bank.
Oh, I haven't heard of that.
And it downloads.
Nice.
So like I have an accountant's version. And so my clients who are utilizing this, I have access to I can see their receipts. So, I mean, I'm clicking receipts. I mean, I'm clicking them all day long from that standpoint, because then they can go anywhere, because now I have an electronic image of my receipt. And so when if it happens on the fly, you know, you just throw it into a shoebox and you wait till the end of the year.
Yeah, not happening.
Not happening.
Right. So you're going to lose out on the deduction. So does it take an extra 3 seconds? It does. But I'm telling you, on the back end of it, it's going to be. And so if you're doing an accountable plan and you have everything kind of set up and laid out in your spreadsheet, have another column that at the end of the month, you're like, here's the car payment, here's the Valvoline oil change, list it all there. And then just take your bank statement, your credit card statement. I scan everything. So either scan it or just put it in a file, so that when you go to your tax professional, you're like, I want actual expenses this year.
Okay. That's great.
And they're gonna, they're gonna argue with you. But you want to be able to take advantage of that. Another thing that I think I see oftentimes is that real estate investors don't keep track of like their computers and things, because that's at home. I have a Mac. So now we're able to deduct the full cost of computers. So we're able to, it's called a Section 179, and that deduction. So that's one thing I like. Your phone, your iPad, I mean, different things. Like I had one gentleman, he bought a camera and some like other equipment to take pictures at his properties. Yeah. And, it was in our dialogue that happens every quarter when I'm asking these probing questions that he's like, oh, yeah, that's right. So remember those, peripheral equipment that you're buying, that you're utilizing in business, that you can actually write off as well.
Nice.
Under the new law, it used to be considered like a listed property and had special depreciation rules. Under the new law, we have accelerated depreciation under 179. So it's really good for that.
I literally need to play back everything that we just talked about before my meeting with my CPA.
So if somebody's listening to this and they're like, I need this accountable plan, I need more planning when it comes to this, idea of tax strategy, and they, say they like the tax person they work with, they just want to up their game a little bit, right? What would be a couple things that need to be in this plan, would you say? If I'm somebody listening to this, I love the, because, women planning, I'm like, oh, I love the term accountable plan. I just love it. What needs to be in this plan? Like, what would you say? Like, not the whole thing, obviously, but just one or two things that women need to be mindful of as they take a little more ownership of being more strategic in this topic.
Right. Well, and I think planning to begin with, this is not an afterthought. This is, we're playing for real here when we're talking about real estate.
Real life. Yeah.
Yeah.
And there's real stakes. So like when we're talking about an accountable plan, it's just making sure that you understand what expenses are going to be deductible and what expenses you're actually having running through your personal life that are actually can be related to your business and are related to your business. And then also taking a look at what's the long-term plan that I'm actually going after. Does cost segregation make is it going to make an impact? Like, can I do a cost segregation study on one of my properties every single year in order to mitigate taxes? Am I going to use the new section? There's a new section of code called 1400Z, which is a deferred capital gains section. Like, am I going to do a 1031 exchange, or am I going to do the new section of 1400Z to defer my capital gains? Like, what is the long-term plan? Like, we can't fly by the seat of our pants. We've got to understand what my 1 year, my 2 year, my 3 year, 5 year goals are, and how am I going to use the code to the best of its ability? So that's kind of the things I would start looking at, is knowing where you're going and then backing the strategy into it.
I think what you're saying is so helpful for everyone to hear, because people think of like planning their taxes and doing their tax as like an event. It's like something we do
every year.
We many people don't even like doing it. It's not something that's fun. We have to do it. It's like this like drudgery versus like this actually can be, like you're saying, part of your business to help you gain and achieve your long-term goals, and I think you come to learn that, when you get into this business and you're buying and selling properties over time. But if you could start out that way, like you'll achieve your goals faster. And I think that's super helpful, as a
and I think we don't know what we don't know. That's why your podcast is so critical, because we don't know what we don't know. I was talking with a real estate investor actually 2 days ago, and they had bought 3 tiny properties, like 99,000, 69,000, 170,000. And I said, okay, let's figure this out. And, just by proper planning, they just bought these properties like in October. By doing proper planning, we reduced his taxation by like $14,000.
That's great.
And he was like, why didn't anyone tell me this was possible? He didn't know that he didn't know.
He didn't know what he didn't know.
Exactly.
Shanyn, we got to have you back on, especially like as January approaches and February, right? With all the craziness of preparing. So you're a wealth of knowledge, and, we just really appreciate all the great insight you're sharing with us. The ladies listening, where can they learn more about you and what you're up to and just the great resources you have that you can offer?
So the best place to reach me is going to be at my website, which is advancedaccounting.com. And I actually offer, there's a little icon in the upper right corner that if they would like to have a 15-minute consultation with me, I'd be more than happy to do that. And so they can actually register right there on my website.
Great.
To speak to me about their particular situation.
Awesome.
Great. And all this information you can find on our show notes. Now we're going to transition to our fabulous 3 questions. The first one, Shanyn, is what's the most transformational book you have ever read?
Oh, Think and Grow Rich.
It's classic. Absolutely. Second question is, what's the most powerful routine you do to create a financially free and balanced life?
I have something called Renaissance time.
Ooh.
Every morning.
Tell us more about that.
Yeah, I get up at 5:30 every morning. I don't see a client till 10. In that morning time, I get up and I practice my gratitude, and I write out my gratitude list. I write out 2 things that are giving me problems, and I send good stuff to those things. And then I just I call it visioneering. I forward vision of what I want to create, and I just journal. And I listen. I get quiet, and I just listen. And I just spend a lot of time listening and contemplating. I actually have a Post-it note on my monitor. It says, what's the one big question I'm trying to solve today? And I think about that. And it can be in my business. I'm a single mom with 2 kids. One of my children has special needs. So there's a lot that goes on in life. And so I take that Renaissance time to recharge and do that self-care. I think that women in general, I don't even have to be a mom. I think that sometimes we get so busy in the drudgery of life that we forget just to take a breath.
Yes.
And that Renaissance time every single day. And it's guarded. Like nobody gets into that time. It's to guard time to actually think about the future. Because if we don't think about what we want to create, life just passes us by.
Oh my gosh. You couldn't have said better.
Yeah. I love that term. Renaissance time. I love it.
We should write a book about it. Yeah, totally. The last question is, which woman, famous or not, has inspired you the most?
Oh gosh. I think my grandmother, not famous. So my grandmother was Seminole Indian, grew up on very, very poor. And she just taught me to be strong and to be confident and to believe in myself. She never lacked self-esteem, even when she was so poor. And she just kind of translated that she used to say to me, and I think it's a quote from Eleanor Roosevelt that says, no one can make you feel inferior without your permission.
Wow.
And I think about that a lot. She used to tell me that when I would feel bad as a teenager, and growing up, she would say, no one can make you feel inferior without your permission. And she taught me to hold my head high, in my successes and my failures, because failures will come.
Yeah.
And it's about being resilient, and she was resilient. And so I think that's who I draw, a lot of inspiration from. And I was very fortunate to have very strong women in my line.
Beautiful.
That is beautiful. Well, Shanyn, thank you so much. You shared some great insight on a very, complicated, full topic, right?
Yes.
And so we really appreciate it. And, for the ladies listening, we'll put all of Shannon's contact info, obviously, in the show notes. And, I'm sure she'll continue to be a wealth of knowledge. So thank you again for making some time to be on our show.
Thank you.
Thank you, Shanyn. If you enjoyed this podcast and want to receive updates on our next interviews, go to our website, therealestateinvestor.com. There, you can subscribe to our show, become part of our investor community, and get updates on upcoming episodes.
If you like our show, please share it with other women who would benefit. And don't forget to leave us a rating on iTunes. We'd really appreciate it. And as always, we encourage you to take one action as a result of today's show and put it into motion so you can live both a financially free and balanced life. Thanks for spending time with us.
Ciao.